Bitcoin has been pumping very hard for the last few weeks, and we are now back up to around $61,000 and back threatening new all-time highs. One of the biggest price catalysts has been the strong possibility that we are going to see numerous crypto ETFs get approval in the US. There are lots of investment management firms with futures-based Bitcoin ETFs lined up, the likes of investment firms such as VanEck, ProShares, Invesco, Valkyrie and Galaxy Digital, to name but a few. And we have also seen the likes of Cathie Wood from ARK talking about setting up one of these Bitcoin futures ETFs. So there is a lot of stuff coming down the pipeline in terms of ETFs for crypto. Here is a letter of confirmation from the SEC in relation to the Valkyrie ETF Trust application last week, which we could see a result of very soon. We could see our very first crypto exchange traded ETF in the coming week. Although these Bitcoin future ETFs would really be great news and would really legitimize cryptocurrencies in the traditional finance world, many think this alone will not be enough to actually pump the Bitcoin price even further. This is because for any of these Bitcoin future ETFs to operate, they don't actually have to be backed by any actual buying or selling of any Bitcoin whatsoever, and often they are actually cash settled. So these Bitcoin future ETFs will essentially be backed up by derivatives of Bitcoin and not Bitcoin itself. What we are really waiting on is a spot ETF, and one of the first expected to apply will be the Grayscale investments. The difference with a spot ETF is that it is actually backed up by the likes of Bitcoin rather than any derivatives. The word is that Grayscale are waiting for Bitcoin futures ETFs to be approved before sending in their application to create a spot ETF. The way they see it is, if the SEC is actually happy with a Bitcoin futures ETF, then they shouldn't have a problem with the underlying asset, which is Bitcoin. But even though we might see an application for a spot ETF very soon, it still could be delayed a long time by the SEC. Fingers crossed that we do actually see some crypto ETFs get listed in the US sometime very soon. If we do, in my opinion, we could see huge capital inflows from the likes of pension funds into crypto over the next year. The assets of global pension funds exceeded $35 trillion at the end of 2020. Out of all this 35 trillion assets, 75% of those assets were made up of stocks and bonds. I believe there is going to be growing pressure, especially in the years to come, from the likes of millennials to have some exposure in their pension funds to cryptocurrencies. And rightly so, because people will be looking at their pension fund growing maybe 8% a year, and then they will be looking at the likes of Bitcoin more than doubling every year, and then they will be asking their pension fund, why are they not at least investing 1 to 5% of their assets into cryptocurrencies? And crypto ETFs will make it much easier for pension funds to meet these needs of their clients. At the moment, it is very difficult for pension funds to actually get access and exposure to cryptocurrency because there are not many, if any, regulated investments. Pension funds can't really go onto Coinbase and buy 1 billion worth of Bitcoin, for example. Could you imagine them storing a few billion worth of crypto onto ledgers and stuff like that? Imagine if they ever got hacked and the scandal that it would cause because they lost people's personal keys attached to their pensions. So when we see crypto ETFs listed on exchanges like the Nasdaq, it's really going to be a game changer. We have already seen appetite around the world from different pension funds. Here is an article from the Financial Times that goes over an Australian pension fund who are hoping to add cryptocurrency into their investments. But at the moment, this may be more directed towards companies actually involved in blockchain technologies rather than investing in cryptocurrencies themselves. But hopefully when we have cryptocurrency ETFs, we will see a lot more capital flow towards those instead. If we did see pension funds allocate just even 3% of that $35 trillion in pension fund assets into cryptocurrency investments, that could easily add another $1 trillion onto the cryptocurrency market cap, which is trading at $2.5 trillion at the time of me making this video. So watch this space, everybody. It's going to be very interesting to see how this all develops. I would love to know some of your own thoughts on it all. Please let me know in the comment section. And if anybody here is new to the channel, please subscribe to keep up to date with my latest videos.